Stock slip as Fed Chair Powell cast doubt over a December rate cut, and the street tries to assess the implications of Trump and Xi Jinping trade thaw. Metals and utilities are the bigger drags. The energy and industrials eke out some gains. Dr. Reddy's gets a non-compliance notice from the Canadian drug regulator seeking further information on its proposed launch of generic semaglutide. The expected delay in the launch is expected to significantly impact its FY27 sales. The Supreme Court's verdict restricts review of Vodafone Idea's relief to additional AGR demand. It also limits any such concessions to Vodafone Idea alone. The stock of Vodafone Idea, Industars and Bharti Airtel slip. Larsen & Toubro shrugs off a Q2 earning miss due to monsoon impacting execution. The strong order outlook on a cited pickup in private capex, a key order win in Europe and a planned foray in precision equipment lift the stock. US President Donald Trump says a trade deal with China could be signed pretty soon. Also cuts the additional 20% fentanyl tariff on China to 10%, bringing the overall tariff on the country to 47% from previous 57%. The two countries also reach an agreement on chips and supplies of rare earths. Trump is also set to meet Xi Jinping in China in April. Hello, good afternoon. You've tuned into Business Lunch, coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Markets, as of now, 24,900, just managing to hold on to that mark. Seen a bit of a dip, especially coming in the last 15-20 minutes, that you could say. Nifty is down 5/10 to 0.6%. So 25,900 is important as a support also. Now, seems like it's going to be breaching that and may go below that. But as of now, 25,900, just about that mark. Nifty is down 150 points. Nifty IT, Pharma, that too under pressure. Pharma is the top sector in today's trading session, so keep an eye out on that one. Nifty Bank down 0.3% as well, so no relief coming in there as well. Apart from that, PSU Banks, that's the one that was flip-flopping between the red and the green, so that is what we'll keep an eye out on. PSU Banks, as of now, comfortably in the green. That's where the pickup is coming. While Nifty had seen a downtick, PSU Banks, that's a bit of an uptick in the last 1 hour, so keep an eye out on that one. All in all, a broader end of the market is also not doing too well. That's why the advance decline ratio, when you look at it, is more in the favor of declines versus advances. Keep an eye out on that. But let's move on and talk about the latest update that's coming between the US President Donald Trump and Chinese President Xi Jinping, who met in South Korea's Busan to negotiate terms of trade to trash out deal agreements on rare earth, tariffs and other restrictions. Chinese Premier Xi Jinping, ahead of the meeting with Trump, alluded to friction between the two economies, but also said that the relation had remained stable under the joint guidance of the two leaders. Listen in to what he had to say.
Since your re-election, we have spoken on the phone 3 times, exchanged several letters, and stayed in close contact. And our joint guidance, China-US relations have remained stable on the whole. Given our different national conditions, we do not always see eye to eye with each other. And it is normal for the two leading economies of the world to have frictions now and then. And in the face of winds, waves, and challenges, you and I, at the helm of China-US relations, should stay the right course and ensure the steady sailing forward of the giant ship of China-US relations.
At the meeting between the two leaders lasted for about an hour and a half, and following the meeting, US President Donald Trump said that the two countries would sign a trade deal pretty soon. Trump also said that he would cut the additional fentanyl tariff on China to 10% from 20%, bringing the total tariff down to 47% from 57% earlier. The countries have also reached an agreement on continued supply of rare earth and Chinese purchase of chips and soybean. The US President also spoke to reporters after the meeting. Let's listen in to what he had to say.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. And what can I say? We have, it was an outstanding group of decisions, I think, that was made. A lot of decisions were made, too. There wasn't too much left out there. And we've come to conclusion on many very important points, and we'll be handing that to you in a little while. We have it, because there was a lot of different things, many of them very important. I've agreed, as you know, I put a 20% tariff on China because of the fentanyl coming in, which is it's a big tariff. And based on his statements today, I reduced it by 10%, so it's 10% instead of 20%, effective immediately. I believe he's going to work very hard to stop the death that's coming in. I think agreed to, for the most part. Then we agreed to almost everything at a very acceptable form. We did discuss chips, and they're going to be talking to NVIDIA and others about taking chips. If we make great chips, and NVIDIA is the leader, and I'll be speaking to Jensen from NVIDIA. I think pretty soon. We have not too many major stumbling blocks. We have a deal. Now, every year we'll renegotiate the deal, but I think the deal will go on for a long time, long beyond the year. We'll negotiate at the end of a year, but all of the rare earth has been settled. There's the tariffs remain exactly the same. It's about now it was 57, now it's 47.
Okay, on that note, we're going to actually sip into a very short break. Don't go anywhere. After the break, we'll bring you more news and updates. Stay tuned in. Welcome back to Business Lunch on CNBC TV18. While we have Cipla's numbers that have just come in as of now, US sales $233 versus $226 quarter-on-quarter basis. We'll get out more details for that, but first we're going to go to Ekta to understand what happened to Dr. Reddy's and why is it falling in trade today.
Well, yes, Dr. Reddy's is in focus because they have received a notice for non-compliance from the Canadian drug regulator for semaglutide, or basically Ozempic generic, which is the weight loss drug. Now, this particular issue, which the Canadian regulator has brought up, has said that they are looking for additional information and clarifications on specific aspects of Dr. Reddy's submission for this particular drug. Now, just to give you a little bit of background, the semaglutide patent itself expires in Jan 2026 in Canada. The company has said that the Canadian market is going to be quite competitive, and they expect that the semaglutide opportunity, if it does not materialize in Canada, they do have other countries to look at where they will be looking at sort of partnering or going in directly, and that is around 87 countries in the next 12 to 15 odd months. Now, the notable countries besides Canada will be India, Brazil, Turkey. They expect the volumes of 12 million pens that they have to be absorbed in other countries, if not Canada. Now, in terms of what the analysts have said is that, like I mentioned, it is expected to be a competitive market. You're expecting around 5 other filers, and analysts are going to be watching for the timeline of approval for other competitors to give an assessment in terms of what that would mean for Dr. Reddy's and the opportunity for them. Now, the street is expecting an approval delay of around anywhere between 5 to 12 odd months. So they could probably get approval before it goes generic, or maybe even after, as much as maybe even a year out. So the estimates are quite wide. Now, FY27, however, as of now, the street is still working with $100 million in terms of revenue from this particular opportunity. In terms of what the brokerages have said, Nomura has a buy, but they've cut their target price. Morgan Stanley is equal weight with a target price of around 1389 odd rupees, and Citi has a sell at this point in time. Revlimid generic has led to a drag which might be tough to offset, according to them.
Okay. That is Dr. Reddy's for y'all. Keep an eye out on that. Cipla's numbers came a few minutes ago. It came almost 5-10 minutes ago as well. But that's what we'll be keeping an eye out on. But before that, Ekta, just a quick word. Cipla, have you managed to see the numbers?
Well, yes. The US sales did come out, and as you can see, the stock has now moved up into the green because it's on the higher end of the estimates. The street was working with as much as $209 million this quarter from the US market, but they've reported $233 million, which is better than what the street was anticipating. So that is the reason why you've seen the Cipla stock move up around 0.5% at this point. Remember that Revlimid generic was supposed to be the key reason why they would face a lot of competition this time, or maybe price pressure in the US, but it's come in better than expected.
Okay, thanks so much for that. That's why the spike up that came in the stock as well. But let's move on. And days after allowing the centre to reconsider Vodafone Idea's AGR dues, the Supreme Court has uploaded its judgment on the matter. Ashmit is here to take us through the specifics of the court's judgment.
Well, on Monday morning, the Vodafone Idea went through the roof is when the Supreme Court had given oral directions that they don't want to intervene in the AGR issue, that this is a policy matter. They want to leave it open to the DOT, to the centre, to decide how best to resolve this issue. However, cut to Wednesday evening, last evening, when the formal order was published on the website of the Apex Court, the fine print became clear, and now more questions seem to have arisen rather than answers. Questions why? Because, well, Vodafone Idea had asked for a gamut of reliefs. It had asked for the additional AGR demand. It had also asked for recomputation of the overall AGR due, citing arithmetic errors. It had also asked for a waiver of all the dues concerned with respect to penalty, interest and interest on penalty. The Supreme Court, however, towards the final portion of its order, which was uploaded, very clearly says that the only relief that Vodafone Idea is asking for is the additional AGR demand under challenge, which again adds up to only about 9,400 crore rupees, which pales in comparison to the mammoth AGR figure that stares Vodafone Idea in the face. So a number of questions come to light. Can the DOT, if it can grant relief, is it only confined to additional AGR demand of about 9,400 crore rupees? Can the DOT travel beyond this additional demand to address the mammoth figure that is staring the sector in the face? And number three, can this relief, if any, that has to be contemplated, can it be only specific to Vodafone Idea, or can it be sector-wide? Can it also be extended to Bharti Airtel, which again is interesting because the Supreme Court says this order is being granted only with respect to Vodafone Idea. So again, a number of questions that now need answering from the DOT.
Okay, let's move on. And L&T is trading in the green after reporting its Q2 earnings. For the details, let's go across to Vivek.
Well, when you're talking about L&T, this particular quarter, while the actual execution, was a bit of a disappointment, but the company gave clear clarifications to what exactly transpired. The execution, number one, the top line was impacted by the fact that the unseasonal and very heavy monsoons that we witnessed throughout the country impacted the execution. Talking about the margins, which softened on a year-on-year basis, the management indicated that legacy projects that were getting executed were booked in the quarter gone by, and the newer projects are still to reach a stage where revenue recognition can be done. So that impacted the margins, but the trajectory is expected to improve going forward. Now, the core, margins that we look at, the E&C margins has come in slightly higher at 7.8%, and the order book very strong at 6.7 trillion rupees. Now, looking at the guidance check, at the start of the year, the company had given a top-line growth guidance of 15%, on track to achieve that. Core margin guidance in the range of 8.5%. The management is saying that it is still a work in progress. But the key positive takeaway is the fact that the company had given an order inflow guidance of close to 10%. They are well placed to exceed that. And looking at the L1 position, it's safe to say that they are expected to beat that particular order inflow guidance quite strongly. Along with that, a couple of other important developments today that the company has announced. They've partnered with Hitachi Energy, and and this is for projects in Europe, where the company will be a HVDC partner supplier. And along with that, they're looking at entering into the electronic manufacturing space. This could have a negative read across for other EMS players as well.
Okay, thank you so much for that. Now, moving on, sources are telling CNBC TV18 that a handful of Indian companies have received license from China to import rare earth magnets. Parikshit is here to give us details on that front. Parikshit.
Well, yes, there are 4 Indian companies, that is Hitachi, Continental, D-Diamond and J. Ushin, which is a JP Minda Group company. All of them have received licenses from the Chinese government to import rare earth magnets from China. This is significant because there were 50 applications from Indian companies that were pending with the Chinese government. And since April this year, when the export control curbs were imposed by the Chinese government on rare earth magnets, since then, no Indian company has received high rare earth magnets. Now, there is hope that more companies will receive licenses and the imports of rare earth magnets from China will begin. Now, this is also coming at a time when India and China are trying to normalize their economic relationship, bring some transparency and predictability, make sure there are no hurdles as far as the economic partnership goes. We saw flights being resumed, border trade being resumed as well. And if we start getting rare earths from China, this will be an important way forward, which shows that some understanding has definitely been reached between the two countries. This also comes at a time when the Indian government is mulling a 7,500 crore scheme for manufacturing rare earth magnets in the country. So the Indian government would be watching these developments very closely.
Okay, thank you so much for that, Parikshit. But let's move on. And government sources tell CNN News 18 that India has secured sanction waivers from the United States for its operations at Iran's strategic Chabahar port till early next year. The extension comes as a relief for India, which has been using Chabahar port to send humanitarian aid and essential supplies to Afghanistan, bypassing Pakistan. The port is also seen as a critical link to Central Asia countries like Uzbekistan, Kazakhstan, offering them direct access to Indian Ocean. On that note, we're going to sip into a very short break. But as we sip into the break, here's a quick note for our viewers. If you did like to access expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to Money Control Super Pro and get daily expert calls, actionable charts and insights to power your investing decision. Plus, the festive season, there's more to celebrate, and 10 lucky subscribers every day win 1 gram of gold. So don't wait, scan, subscribe and make your portfolio shine brighter with Super Pro. Thanks for staying tuned into Business Lunch on CNBC TV18. Now, the big cue from the Wall Street that came in today is the widely anticipated move that came in from the Federal Reserve. The U.S. Federal Reserve cut interest rates by 25 basis points. This marks the second time this year that the central bank has slashed rates. We have CNBC's Steve Leesman here to give us a recap on that decision.
The Federal Reserve cutting interest rates by a quarter point to a new range of 3.75 to 4%. There were 2 dissents on this. The second one by new Fed Governor Myron, who wanted 50. First one by Kansas City Fed President Jeff Schmidt, who wanted no change. So dissents on both sides, a kind of a rare occurrence for the Fed. The Federal Reserve announcing it is stopping quantitative tightening or the roll-off of its balance sheet as soon as December. All roll-offs of treasuries from here on out and mortgage-backed securities on the Fed's balance sheet will now be invested into T-bills. It's a bit of a change there. On the economy, the Fed said economic activity expanded at a moderate pace, according to available indicators. One of 2 nods in this statement to the absence of data by the Federal Reserve. It had said in September that the economy was moderating, so almost a bit of an upgrade to the economy, but according to available data. Job gains, it said, has slowed, however. Unemployment remained low through August. And again, it said more recent indicators are consistent with these developments. That's another nod to the idea that the Fed doesn't really have the official data. More recent indicators is what it's using. Inflation, it says, has moved up since earlier this year and remains somewhat elevated. That is the same characterization as September. And there's not much in the way of forecasting the future path of rates. I believe that'll have to wait for the press conference from Fed Chair Powell. But again, the Fed cutting by a quarter, two dissents on both sides of the issue. One wanted more, one wanted none at all, and the Fed stopping quantitative tightening as of December.
In fact, let's listen into Fed Chair on his statements made after this decision as well.
There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Okay, that is the word coming in there. But with that, we're absolutely out of time on this edition of Business Lunch. Thank you so much for tuning in. Up next, a Midcap Radar.